Jeff Scott here, and welcome to this week's edition of my top-down review. It is approximately 10 a.m. on Sunday, August 13th, so clearly futures are not out yet. I entitled this week's edition, Will Support or Does Support Hold or Turn to Resistance? And we'll show you some charts that will bring that question to light. But to me, is this just another of the 2 or 3% corrections that we've had over the last year or so and ready to bounce? Or is it going to be different this time? And we'll look at arguments for both sides. As always, this is for educational purposes only. Any recommendations are in the sphere of education, not investment advice. I'm a doctor, not a broker. I am independent. I've paid for all the tools I use. And trading involves risks. You and you alone are solely responsible for any decisions you make. Be your own guru. That's how I like to describe my trading. Learn from people that you find smart. Take the best that you can from each of them. Mold them together in a style that might be uniquely yours, and be your own guru. Don't rely upon others. So I started with CanSlim, improved by Morales and Catcher, take it to the computer, and made better by Ian Woodward and Ron Brown. Add a little John Person, who really taught me how to actually take the trade, how to manage the trade, and really how to read charts. He's got some great indicators. Money Management, Van Tharp, George Lee, my buddy from Canada. And then for folks looking for more basic education and some tools that can make it even easier for you if you don't want to invest the time, perhaps. Guy Cohen's got Option Easy and Flag Trader, a couple of great sites, and he's a great teacher as well. I have a lot of different programs. I hide my background when I remember on purpose, because no one needs to see all those that I've wasted my money on. However, I do need TradeStation and Thinkorswim. I like Genesis for certain charting and scanning, but it's not essential to most to do stocks, not futures. For analytics, HGSI is the best program on the market. EdgeRater is a complement to that. Yes, seasonality is important, but only when technicals support it, and a number of my favorite websites. Just reminding everybody, November 30th to December 2nd, John Person has a 3-day event. If you're interested in that, you need to contact him. There's a phone number here. Mary Person is his wife, or personsplanet.com. They have some information on it. I will be speaking at that program. It's an independent program from the one that I'm going to mention next. But if you have interest, either reach out to John's office, his website, or email me. I can hook you up there. I know they're filling up, but they had a few more spots. I've had a couple of requests to do a meeting this year, and I've decided just to piggyback onto John. So I will do a 1-day meeting, again, separate registration, separate fee, on Sunday, December 3rd. I'll show you how I use my tools to trade and important things about my trading style. I'm not tied to my computer during the day. I like to spend about an hour a night beyond just updating the software. And I do this full time while I build companies. Topics will be principles learned from Ian, finding my A trade, managing the trade, favorite option plays, setting up scans, and putting it all together. The meeting will be at the Palm Beach Garden Hilton Garden Inn, which will be the same place as John's meeting. $400 if you attend John's, $500 if you want to just come to mine. Limited to 12 attendees. I'll include meals, including what's traditionally become a knockout meal the night before, and you'll receive MP4 videos of each presentation, as well as slides and PDFs. Here's the website for highgrowthstock.com. I have no financial or any intellectual relationship, except I would say that they help me, because if I have a question and I want something added to the software, I think anybody can request it. I think I probably have a little extra chance of it happening because of the support that I've done. In fact, these webinars started really as just being a user support for this program. A couple key points: free 30-day trial. And under investing strategies, you'll see hundreds of videos from folks like Ron Brown and I. Stock patterns are cyclical. Where are we? Well, boy, on Thursday, it really felt like we were riding down here. I didn't bring it into the presentation, but when I look at my stocks and sectors, I don't think there was any green, except for maybe some utilities on Thursday. And just as if we thought the market was done, the pundits are calling for that 10% correction. We are in August, so we're at that time of year where markets correct. Friday came and we had a little bit of a respite. Now, was that the beginning of another leg up? And will we continue in a very narrow range without a 10% pullback? Or was that a one-day blip and are we coming down? I see evidence to support that we might have a little bit of a rally here, but this is a time of year that I do expect, if we're going to see big corrections, that this is when they happen. So if we have indecision, we have to address how we're dealing with the market. For me, that meant raising cash, smaller positions, selling way out of the money premium. Now I play SPXY. I was very long SPXY puts, which meant I was hoping that the market would drop. And now I am short those puts, hoping that the market will rebound, although I've got protection below the puts that I'm short. But it is a time when this is not a time to go away and not pay attention to your portfolio. This is clearly not a time to be all in. And if you need your money to live on, this is not a time to put your living at risk. I think this is a tenuous time in the market. I am in it. I have balanced long and short, which is not unusual. I have puts on some of my longs, and I will be more in or less in based upon what the market looks like going into Monday. Right now, I'm concerned, but I am hoping for a short-term bounce. Here is a Friday sector review. If I compare this to Thursday, everything was red. Note that energy and finance are a sea of red. Utilities were also red on the recovery day. Where's the strength? Consumer discretionary. Retail's actually strong of late. Biotech and healthcare look good. And transports look like they're turning around. So I'm going to actually audible and go into Thinkorswim here and just show you perhaps what might be considered the optimist view. I'll get this to work. Come on. Yeah, there we go, maximize sell. Here is the E-mini futures. Simple chart, candlesticks, the yellow are PPS sells, the blue are PPS buys, that's John's indicator. The 17-day in green, the 50 in yellow, and 200-day in red. First thing is I look at the S&P. As much as I might want to be depressed about the market, I see that the 17 is above the 50, above the 200. So we're still in an uptrend. Okay, that's simple. I noticed that we had a horrible day on Friday and Thursday, undercutting the 50. A big volume day. We had a small rally, but really just an inside bar on Friday on better than average volume, but still nothing like Thursday. So the question is, will we get back above the 50 and that 50 becomes support again as it's been each time we've done this correction of late? Or will we fail at that 50 and turn into resistance? I think that is a very important question, and it will be interesting to see. So this is the S&P sitting right below the 50. Here's the NASDAQ. Now the NASDAQ looks a little better. It broke above the 50, but still in a PPS sell signal. How about the Dow futures sitting right on the 50? Excuse me, sitting right on the 17 rather. So these have been the strongest, and they actually pulled back just to the 50. And then the Russell, the weakest in the setting of a fairly significant 6 or 7% pullback, sitting right on the 200-day moving average. So that is the worst of the indexes, and it too is sitting right on support. Now, what was different this week is we had a VIX spike. Now, this is sort of a spinning top. I guess it counts as a doji, as the body is less than 8% of the length. Is this going to come back in? Well, that's the pattern in the past. All right, run up, indecision bar and roll over, run up, indecision bar and roll over. We'll have to see what happens here. But clearly, this is a different VIX closing the week at 15. If I go to a weekly here out of curiosity, you could see that this is an area where at least since the end of 16, we did reverse from. But if you look back into 15 and 16, especially before the election, you can see some pretty impressive VIX spikes. And what you probably need to be careful of is that we're not seeing a little bit of this, a run up and indecision day, head fake, and run back up to higher highs. So I think it'll be interesting to see what the VIX does. That may give us a sense. Hope I don't live to regret the fact that I am short SVXY. SVXY, as volatility goes up, SVXY will drop. But I have a vertical to protect me, so I won't be hurt that bad. And I made a lot of money on my long the puts. I'm short the SVXY puts. So if the market goes up, I lose money. Get this right. The market goes up, the SVXY. The market goes down, the SVXY will go down, and my puts will start to hurt me. I have to get all my puts, shorts and longs and calls straight. But here we have the VX, which we looked at, and then let's look at the dollar very quickly. And dollar is down. And now notice, I want to show you something here. On the way up, the 17 was support. When it broke through the 17 has pretty much been resistance on the way down. The 50 was support, and now the 50 is resistance. So sometimes when you think you're just pulling back to support, as we did here, you're really about to change your colors. And when support here turns into resistance and you fail, it's not good for the market and it becomes a shorting opportunity. So let's reverse this. All right. So we looked at this already. So let me bring this up. Here's the weeklies, and you can see the weeklies are clearly in uptrends, and that the VXX did move up a little bit off the bottom. Notice the dollar on the weekly is on the 200s and the 1,000-day moving average. Here's my genesis, and I guess the point is on the daily, which is the middle row, you can pretty much see lower left, upper rights throughout. But we clearly are in a short-term correction here with sell signals on several. This would be the E-minis. This is the NQs. This is the Russells. This is the NYSE. And here is the Dow futures. They're all on daily sell signals. Rates fell this week. You could see both the 10-year and the 30-year turn back down after a rally. That's not good for financials. AD lines, there's no divergence. Both the AD lines on the small and the large stocks have fallen alongside their indexes. The breadth, the number of stocks above the 200-day moving average and the number of stocks above the 400 weakened, consistent with the sell-off, but are not yet oversold. Here's one that is suggesting a bounce is near. This is the 3-month new high, new low index. And every time we get down to here, where my arrowhead is, we always reverse. But if you look back, you could see we're sort of in the range where reversals occur. So based upon this, I would think we're within a day or two of a bounce, if not a bounce imminent. The daily McClellan has now broken to the lowest amount that it's been in months. And if you look at the weekly McClellan, you could see it's turned down essentially the lowest of the year. Current buckets. Now, on Thursday night, I did an analysis starting to look at Ian's boxes. Maybe I'll talk about them next week. Certainly talk about them at the meeting that I do, because when I start to see 22% of stocks in the S&P 1500 trading below their lower Bollinger Band, I know we're getting close to a place that the market's going to reverse. And we did some on Friday, but we still have 16% below. So more evidence that we could have a reversal coming. HINDY free zone, kind of. The problem is we don't have many new highs. Other than that, 3 out of the 4 criteria are being met on both the NASDAQ and the NYSE. Market tone, we had a sea of red kahunas on Thursday, and that has put the market clearly into sell mode. And then if you look at sectors here, where my arrow is, the only sector that's not red is utilities, and that's been one of the strongest of late, a defensive sector. Those who've been following me for any time know that I have a couple of different artificial indices that I've put together with the hope that when the market turns over, these indexes will get me out of the market first. This is the canaries, this is the FANG plus others. You can see the stocks in the upper right-hand corner. And my message here is chop, but uptrend still intact. So still strong, and tells me this is not necessarily over for the bull run. The E index is something I put together. I'm learning some of the things I learned from Ian, which is basically, adjust that a little bit, some of the major stocks of the market. I did this on June 27th. At the time, I said these were the leaders in the market. I said it's not necessarily what you buy, but you watch these, and when they roll over, watch out for the market. And notice we've had some tests of the 50, but we're still up in an uptrend, sort of in chop going sideways, but holding above the 50. Know your news and earnings. I think this is a relatively light week comparatively for both the news and the earnings, although, you know, JD, Home Depot, Urban Outfitters, Cisco, Target, Alibaba, Walmart, Applied Materials, The Gap, Foot Locker, and John Deere. These are major companies. It's just last week I had to go to a much smaller font and its own dedicated slide. As it says in the lower right-hand corner, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Markets had the worst week in months with a broad market sell-off. Market rest at an interesting point. Russell on the 200, the rest near their 50. Remains to be seen whether support holds or becomes resistance. Falling interest rates remain bad for finance. Rise in VIX as volatility and politics return to the market. I remain concerned, especially with seasonality of overall market, yet new high, new low in bucketology signal reversal opportunity. The fact that the canaries in the index have not rolled over is interesting. This week we see if there's another shallow pullback or the beginning of something, if there's more to a shallow pullback or a bounce, or the beginning of something much worse for the bulls. Tonight's agenda, my usual top-down review, and let's go on to the charts. Now, I usually, and I will today as well, go into TradeStation, and typically in TradeStation, what I like to do is look at one of my views, which gives me a sense of what the indexes are doing. I just want to point something out, that if you have TradeStation, there is a simple indicator that you can get for free if you go to the TradeStation forum and search for Guru and earnings. Let's see if it's on this one. It's on some of mine, but not all of them. Let's see if it's not on that one. Is it on this one? Oh, I don't use this computer all the time, so I'm hoping that it's in here. There is a, I'm just going to add it. All right. I'm going to add it to this. Insert analysis technique. Okay, you notice this is called NP earnings. You won't see it unless you go to the forum, search for Guru and earnings or NP earnings. And here's what this thing does and why I like it so much. I'll drop it onto my radar screen. It's going to start to populate, it may take a few minutes, earnings dates for all the stocks I have. And it's going to tell me how many days to the next earnings. That's an ETF. That's why the number is kind of bizarro. We may come back to look at this later. It takes a while, and I've got about 600 instruments here. But once it's done, and it tells you how many days to the next earnings. Again, things that are ETFs are somewhat bizarre on earnings dates. I'm not sure they actually have earnings dates. So we'll let that do its time. But what it will do is it will come in and it will tell you oh, I've got it here. I'm sorry. It tells you on, maybe these are my holdings. And if I want to know if there's anything coming up this week, I know that CBay is on Tuesday. Equity Outfitters is on Wednesday. BZoon is on Wednesday. Net Appliance is on. So I can see when these things are, what time they're anticipated coming out. And how do I avoid surprises? I'm always looking a week in advance. All right. So I guess I don't really need it in here. So I'm going to take it out because it's going to use up a lot of processing power. All right. Let's go to my market force and divergence. So this is sort of 5 or 6 things I do every day to get a sense of the market. I'll start with the E-minis. And a couple of things I look at. Number one, am I in a buy in green or a sell on a person indicator? I'm clearly on a sell. I'm on a sell on the daily and the weekly, a buy on the monthly. Number two, am I in a red, which means I can be short or holding but not going long? Am I blue, which is I can do whatever I want? Or I'm in a green, elder impulse indicator, which says I could be going long or holding, but I shouldn't be going short. So I'm in a sell and I'm red, sell in blue, buy in blue on the monthly. Where am I within the auto envelope? And as you can see, it doesn't rebound automatically on the index, but when I start getting below or above the auto envelope, I usually go sideways till I get back in. Well, I'm already below the auto envelope. That's 3. The fourth thing I look at is my, let's see, 1, 2, arrows 1, colors 2, auto envelope is 3. I start looking for evidence of divergence or convergence, which would be these dots at the top or the bottom. I don't see any of that. And then lastly, I look at my high jump here, which is, if it's above 95, I know I've got a sell-off coming. And then daily, weekly, and bongo. The weekly bongo is red, which is a sell signal. E-mini looks weak on this, but it looks at a place where I might expect a bounce. Let's look at the YM. We know the Dow has been the strongest. So let's look at this sell signal in the middle of the auto envelope, still in a buy on weekly and a buy on monthly. Red paint bar. Notice the little red dots on the weekly, so there's some MACD divergence coming in here. We already talked about where we are here. 50 on the high jump, the weekly bond goes green. Dow looks a little bit better, but it too looks weak. NASDAQ 100s, sell signal near the bottom of the envelope. Still a weekly and monthly buy, 42%. And then the weakling of the bunch should be the Russell. And you could see how far below the auto envelope the Russell has gone. Its high jump bar is 2.97. That means it is more extended to the downside. It's within 3% of the biggest downside extension that we've seen in the last 200 trading days. This is a place where you expect a bounce. So this may be the place that bounces first. A breakdown from here, or continued breakdown, will be ominous. And notice the weekly bongo went red several weeks ago. Or this is the daily bongo. That's the weekly bongo, I'm sorry. Went red at least a week ago. And then we look at the dollar. A new sell signal, so it had a little pop when it fell below the auto envelope and had some MACD convergence. It's already in a new sell signal. The dollar is weak. That should make gold look shiny. And gold has been in a nice move up, both from the political unrest and the weak dollar. Now, before you start going out and mortgaging your house to buy gold bars, notice that we're above the envelope and we're at 99.57 on the high jump. That means this is the highest extension that we've seen on gold over the last year. It may continue to rip higher, but it's getting to a place where I would expect it to reverse. The VIX, look at the VIX move here. It doesn't have a high jump bar for I think, would the VIX ever have a high jump? I guess it's never going to have a high jump bar. There's your VIX. Popped. All right. Now I like to go into HGSI and review some of those major indexes with my HGSI charts. So I take the major markets plus, I go top down, which is all price and volume, and I rank by combo. You can see gold is the strength of the week, bonds. So when gold and bonds are the highest and the small caps and NYC are the lowest, you know it was a tough week on the market. So let's just take a look at some of our favorite indexes and see if we can't get sense of where they've been and where they're going. S&P, as we talked about, sitting right below the 50-day moving average. Now, this was the election, and this is 1, 2, 3, 4, 5. Is this more of the same, and are we going to bounce off the 50 as we've done in the past? Well, I guess odds are, in my mind, we probably will, but one of these times we're not going to. So I have to be prepared as I plan for this week, and why I'm not all in or all out. Is this going to be a bullish move and we go back to new highs? Or is this going to be a bearish move and we're going to go down just like the Russell and visit? Now, a pull down to 2350 from here would be over a 100-point drop in the S&P, and that will be painful. So that's the question. My expectation is we bounce from here. I still think that before year is over, meaning sometime in the next month or two, we could revisit that 200-day moving average, but we shall see. That is the S&P. If I look at the Dow, as you can see, a much stronger pattern where it hasn't even pulled back below the 17-day. All right, let's look at the NASDAQ. Sitting right below the 50, just like the E-minis. This is a nice place to bounce, and it could be a place for it to fail. So it'll be interesting to see. You notice the weekly bongos turn red. I don't like to see that. And the Russell 2000 has been the weak sister, and maybe it will be the one that bounces first as it's sitting down here on its 200. I would say that the Russell, I'd say these are all, except for the Dow, at very critical places. And if these moving averages fail to hold, there's this thing called an ice hole failure where you worry about them breaking down, failing a retest, and then breaking down further. This is a place that this thing better bounce. Going into the dollar, which we've talked about being weak, and you could see the dollar had a small bounce, but really is near its low. The VIX, we talked about it having a little bit of a pop. And then an indecision day. Be interesting to see if it comes back down. Gold, taking advantage of a weak dollar and indecision and breaking above or really at a triple top here. That's interesting. Just put a line there and say, if I want to be long gold, it's got to get through this triple top before I'd be willing to touch gold. So it's right at a triple top. So do you think that's not a perfect place for gold to reverse, especially with how extended it is from the high jump? I do, so I'm going to be very careful with gold here. If I look at silver, have been beaten up more than gold, and you can see it's struggling to get above the 200. And then gold miners also strong here above the moving averages. Keep in mind that if I go back to gold, it is a short-term thing that looks pretty good. When I look at a weekly, it's been in a long-term downtrend and just going sideways. And frankly, I love boxes of various types, especially boxes that new computers and stereo equipment come in. That's for my wife to know. And we've just been living in a sideways move for quite some time here. All right, so now I've looked at the major indexes. I get a sense of what the market's doing. I like to go to 07 industry groups. You can see I've got 173. I look at the 2-day force up, and this tells me that 26 have momentum to the upside. I look at 2-day force down, and I see that only 2 have strong momentum to the downside. Well, that's interesting. Entertainment, facilities, and content. That goes along with a relatively strong day Monday. If I look at 5 days down, you can see I've got 74. So over the intermediate time, I've got a lot of down groups. And 5-day up, I've got only 12. So that tells me over any length, for a long period of time, the market's been weak. But over the very short period of time, we had a strong day, and Friday clearly was a strong day. Typically, I will look at the top 10 groups. For the essence of time, we'll take a look at the first 5. Exploration and production. It's hard for me to get excited about energy here. It has had a move. It's been a tough trade to be in, but a couple of them looked interesting. This was one. I don't know anything about Enerplus, ERF. It's not a big boy. You can see its revenue here. It makes money. It's got great earnings per share growth. It's kind of gone sideways, but it pulled down to the 200, had a PSA reversal on Friday, a kahuna, everything's green up here, Mobo breakout from a squeeze. This actually made my buy list. And its average trading volume is 1 million, so that's got plenty. Continental Resources, this is a fallen angel. This is one that's been a major mover in the past. Makes money, positive earnings per share growth, lots of demand. Moved up off a confluence of moving averages, still in a long-term downtrend. Weekly bond goes red, higher risk. Gulfport, another high risk. And then there's the index. Somehow, I guess because they had a big price increase and lots of volume, this group actually made it to the top, and it doesn't look that beautiful, although I did like Enerplus. Precious metal, no surprise with gold strong and silver strong. Is anything here that looks interesting? Pan American Silver, kind of a sideways breakout here. New weekly bond goes green, kahunas, pocket pivots. AU, ABX. This is the first one that looks interesting to me. It's above its moving average. The weekly bond goes green, had some pocket pivots this week. This is Randgold, still a $100 stock. And this is Franco, Nevada. This looks interesting too if it's breaking out of its recent high. It's going back highest it's been in a year, Franco, Nevada. So far, the stock charts don't look so hot, but we've got a couple of interesting things at Enerplus and a couple of those gold players. Healthcare facilities. I saw that community health systems had a big move on Friday. This has been a beaten down stock. A lot of it depends on what happens with Obamacare. Let's go to more info from the web, and then I'll explain the Obamacare thing in a second. FinViz, if it's working, should give me the news, and it goes right to the specific holding. So it's up on earnings. Well, that's nice to see loss narrower than expected. Why do hospital systems like Obamacare? Because when I was going to med school, each hospital set aside funds for uninsured or underinsured customers. It's very difficult for a hospital to turn away a sick person even without insurance. Sometimes those of us that have insurance feel like all they want is our money, but if you have no insurance, they're usually very good. Under Obamacare, the number of people without insurance went away. So now everybody was entitled to insurance. And so the bad debt, the uninsured debt that these hospitals had went away. With discussions of removing Obamacare, that risk goes up and the stocks fall. If it looks like Obamacare is going to stay, the stocks go up. So I'm not sure, if that had anything to do with it. This seems like an earnings play. Hard for me to be buying community health if I look at the chart. HCA Holdings, Tenet Healthcare, Acadia Health. This was the one that probably looks the best to me. This is psychiatric facilities. Especially if they do something about the problem with opiate addiction. Um, these people may do very well. It's in an uptrend. It's had a big move. It makes money. It's got positive earnings. So it's kind of disappointing to me that I've now looked at the top three groups and I found pretty much only one stock in each group that really excited me. So that's the third group down. Fourth group, infrastructure software. A couple of these look interesting. So I know we've got some things that are good here. Microsoft, and notice earnings are out up here. Um, Clearly lower left, upper right. You could be buying it off the 50, green candle low, bongo positive, and it kahuna to the upside, pays a 2.2% dividend. The only issue I have with Microsoft here, I mean, the chart is as good a chart as I've seen you. I'd put it intermediate looseness, not super tight, is the fact, and it does pay 2.2% dividend. My only concern is it's got no earnings per share growth. So maybe this is a safe haven and a safe bet. Barracuda Networks, I kind of like this one a lot. Sideways move. I think earnings came out this past weekend. And on earnings, it had a Bible gap up, took out the PSAR dot, everything except for accumulation turned green, mobile breakout from a squeeze, a pocket pivot, and a kahuna. Barracuda Networks is on my buy list, but here's how I build my buy list. I right click, I go to my user group, I find buys, and I just click it. All right. I also liked Red Hat. Nice uptrend, pullback to support, has a kahuna. Take out that PSAR dot. This could be an interesting play. It's had a long run. It's priced high based upon its growth rate, but this is clearly a leader and has been a leader. Semantic, Palo City. So again, this is what I do every night as I go through the leaders. Packaged food. Well, this is always my favorite place. Joke, joke, joke. Just tells you that the traditional growth stocks aren't working. Where's my semiconductors? Where's most of my software and technology plays? Here is McCormick and Company. They make those little shakers of stuff. Not very compelling. Not compelling. Not compelling. So what's compelling on all these is they've been up over the last 2 weeks. This one breaking above the 200-day moving average. It's got some earnings per share coming in. Tyson's food, I think, is chicken. I don't see a whole lot to be excited about. Now, I could sit here and go through the top 10, but until I get to internet-based services, I'm seeing a lot of defensive groups. So metals, food, restaurants, tobacco, containers. These are very defensive plays, beverages. So let's look at internet-based services, change the index group, and I see a couple that I know that I like. So we can probably go through 4 or 5 here. So the first one is Auto Home. Is it too late? Yes. Here's when you should have bought. Here, or more recently, right back here, breaking above the moving averages, a mobile breakout from a squeeze, a pocket pivot, and a kahuna, and the OBB taken out. That would have been the clue to buy, and it's now taken a big run. I probably would not be chasing it here, and if I owned it, I'd have a trailing stop. Trader Desk, this has been a nice mover, sideways move. Didn't really do much with earnings. It does have some earnings per share growth. TripAdvisor, sort of down in the penalty box. Earnings are out, and looks like it's trying to move, but it's going to have a hard time, I suspect, getting through the 200. You could see how it may have been support on the downside, on the upside, but on the downside, it's resistance. I wouldn't probably be buying this until it breaks above the 200. Yarendi, of course, I bought it here and got rid of it when it was in its base. Again, where would I have bought it again? Right there. A kahuna occurring, a breaking out above the moving averages. Everything is green above. And this one broke out on earnings and continues to look strong. Maybe I could play in this one. It's gone sideways for a couple of weeks. Everything's green. Kahuna, mobile breakout from a squeeze. So this is the first group that actually looks compelling. Got some semiconductors down here. Specialty chemicals. So I will typically go through the top 10. Now, some of the other places where I find my favorite stocks, set this at, this is just a very minimal filter for price and volume. And I'm going to show you where some of the gems are hidden in HGSI. Go into the smart groups and go under David Gallardi, sprinters, and hit warehouse. These are some of the best stocks in the market right now, and all I had to do was look at sprinters. And we'll look through a couple of the charts right now, and I'll show you what I'm talking about. Here's At Home. Or Auto Home. We looked at it already. Kutera, I think it's a medical lasers. Nice tight uptrend. And then here, after a kahuna and a mobile breakout from a squeeze, had a Bible gap up the next day. Somebody knew about the earnings. Here's Yard we looked at. Grubhub, leader. Weibo, I own some of this, sort of a cup, a handle. A breakout from here I think will be very bullish. Look at the earnings per share growth. Its earnings are out. Weight Watchers, Oprah stock, leader. Johnson Outdoors, don't know anything about it, but certainly breaking out as a leader as well. The point here was, here is a smart group. Here is the date the scan was run on, 8/11, which is Friday. And all I had to do was rank them with my scorecard. Top things came to the top, and there are a lot of things in there to like. If I go down to Woodward and Brown, you can see the best of Woodward and Brown. Same thing, hit warehouse, Auto Home, Yard, Kutera, Grubhub. It's the same stocks, adding a couple there. If you like cheaper stocks, best stocks under $15. Take a look at a couple of these. I know I own the first one. It's a high growth pharma stock. That's not what we wanted. Hold on, I hit the wrong group. Sure. Best stocks under, hit warehouse view. There we go. So this will be good stocks that are cheap, less than $15. Lower left, upper right, a little loose for my taste. This is CORT. It's got some great earnings per share growth coming in. Form Factor is a technology play. Lower left, upper right, kind of loosey-goosey. Cryoport, wow. How would you like to have bought this at 3 and have it at 7? I'm not saying I would have bought it, by the way. I probably would not have been interested to over here when I had a kahuna, a mobile breakout from a squeeze, and a Bible gap up. I don't look at $3 stocks. This is the kind of time you wish you would. Does it have room to go? That's your own decision to make. Doesn't trade enough shares for me, only 148,000. So the point here is I use these smart groups to find some of the best stocks. You can go down to my name, Jeffrey Scott. I find that volume sometimes is a big kicker. There weren't a lot of big volume stocks on Friday to the upside. Let's see if any of these look interesting. Overstock.com, not one of my favorite names. Bottom Line Tech. All right, so it's a red candle because it closed off its high. But here's a stock, the earnings probably just came out. Big gap up, close in the upper half, mobile breakout, Bible gap up, pocket pivot, and kahuna. Now I might want to learn more about this stock. Alexander and Baldwin, real estate, don't know anything about that. So I look at those every day. And then you could go down here. What are my favorite stocks? My favorite stocks are pullbacks to the 50. You've heard me talk about that for so long. Pullbacks that then have momentum coming in. That's the key term. They have to have momentum. Here's a stock, Thor Industries. I think they do motor homes. It's sitting right on the 50 with a kahuna in an uptrend above the 200. Sometimes I find some real gems here. Supernus, sideways, pullback to the 50, pocket pivot and kahuna. I don't like it below the 50 with a weekly bond go red, but I bet that one goes higher. Memetics. And I often find some stocks that I like here to buy. And this to me is where I make my money. It's uptrends, pullbacks, and then momentum coming in. Uptrends followed by pullbacks don't mean anything until I see momentum because they can go a long time. And then the other one I like is my squeezing PSER reversal to the upside. And you'll see stocks that are about to break out that haven't broken out yet. So to make this screen, I've got to be an uptrend, I've got to be in a squeeze, and I've got to be right below the PSAR dot. And I know that if I take out that dot, it will give a buy signal to a number of people that follow Wells Wilder PSAR. I know that the stock has not broken out yet, and I know that it's squeezing, so it's been going sideways in this scan. This is a takeout. A lot of takeouts will be in here. And every once in a while, I find something that's really compelling. Now, it doesn't require a kahuna or anything. It just requires your squeezing right below the PAR dot. This one's now showed up on a couple of scans, Progress Software. Another way that I find stocks to look at is I run scans in TradeStation. So let me go here, and this is combining some things from a company called Q and John Persons, but I really liked a JP2. A JP2 by definition is a stock in an uptrend that's pulled back and now has a new buy signal. So let's look at Celgene. So stock has clearly been an uptrend. It's pulled back on the weekly. And hold on a second. Before I get all excited, did I not update? 8.5. All right, the scans aren't updated. Never mind. So back here on the 5th, it had a buy signal after a pullback. So I'll use these tools to find stocks all the time. I've got so many computers. Sometimes I remember to update. Sometimes I do not. I just run that scan right now, and I'll pause for a second. Okay, I just ran the scan very quickly just to show you. So a lot of the stocks that I like, I'm going to find on this specific scan. Newmont Mining, NEM. So let's just take a look at Newmont Mining. So it's a mining stock. Unlike all the mining stocks that have been in horrible downtrends, it's actually been going sideways. On the weekly, it's had a buy signal here for a couple of weeks. You notice it's right on a trend line support here and a new PPS buy signal daily. This is how I find stocks. This is just one of my charting platforms I use, TradeStation. Barracuda Networks, we talked about that one on HGSI that looked interesting. And you could see a gap up here and a buy signal. One concern is this is a automated trend line that I get drawn on my charts. So it's coming up near trend line resistance. So I'll find a lot by looking at my TradeStation scans as well. And lastly, I get a lot of my stocks, frankly, by going into investors.com. And just going into some of their special lists. So the stock list up here, for example, the IBD 50 is one of my favorite places to look at stocks at. I do hate how, even if I'm almost a paid subscriber, they have so much advertising on this site. And one thing you can do if you don't know this, if you have this, you can just scroll to the bottom of the list, and you can always hit export, save link as, and in a second it's going to pop up, and I can save that file wherever I want and import it into other programs. So let's go back into HGSI, and I'm just going to close by where I came up with my buy list. So my process is simple. I start with my top-down approach to decide whether or not I'm bullish or I'm bearish. I look at the things that I showed you that look at internals, momentum of the market, and frankly, I spend a lot of time on the charts. I then look at the top industry groups, and I typically go through the top 10 to the upside and to the downside to find stocks to buy and short. Then I create two massive lists. One of the lists is called consolidated buys, and consolidated buys are from all those positive buy lists and scans that I do, the upside. And then I have an analogous one called weekend bears. And then I basically narrow the list a little bit with price and volume. I look at all the charts, and I try and come up with the places I'm going to play. I'm going to spend 5 minutes just going through my buy watch list for the week, and then I'm going to say goodbye. And most of these we've seen already. Here's Yard. We saw that earlier. Auto Home, we saw that earlier. Weibo, we saw that earlier. Corcept Therapeutics, we saw that earlier. So the first four we found on the typical scans. Here's a semiconductor stock, great earnings per share growth versus multiple, Lower left, upper right still looks strong. KEM, K-E-M. Control 4, I don't like the earnings per share growth, but almost the exact same chart as KEM. Two kahunas last week. Sort of a flag up here. It looks like it's breaking out the flag. Will go higher. Control 4, CTRL. YY, nice uptrend, probably too far extended. Hard to believe I'm talking about a shoe stock, but Skechers, let's put it on a weekly. I think I saw something on the weekly. You've been sideways for quite some time. Kind of a cup and a handle on the weekly. Let's go back to the daily. Downtrend, sort of a flag here. Looks like it wants to break out. Had a pocket pivot kahuna on Friday. Does have earnings coming back in. Red Hat, we looked at. What a beautiful place to buy Red Hat. Big uptrend, pull back to the 50, had a kahuna. My only problem with it is a $100 stock and slowing earnings per share growth. Kronos Worldwide, a specialty chemical maker, had a belt hold day on Friday. I'll probably have to get back above this PSAR dot before I'd be interested in playing. Great earnings per share growth. Earnings just came out. The Carlyle Group did nothing until April, when you see a series of pocket pivots and kahunas. Been a nice uptrend since. Pays an 8% dividend. Enerplus, that was the first energy stock I liked. TripAdvisor, clearly in a downtrend, but if I was just to look at it down here, it looks kind of interesting, sort of a rounded bottom. Had a kahuna mobile breakout come in and made my list. Ollie's Bargains, pull back to the 50. SQM, it's a minor, sort of a flag here. It's on a watch list, not a buy list. Barracuda Networks we looked at. Omeros, this is a biotech. Pull back to the 50. Moved up, flag, be interesting to see, mostly watching this. ADI, sitting right on the 200, had a kahuna. It's not a buy here. I'd want to take out the PSAR. It's got earnings coming out shortly. And my question on Analog Devices, is this ultimate support and it's going higher, or is it a breakdown from here? So it's on my watch list. Cone is a data center REIT. Great earnings per share growth, pays about a 3% dividend. Pulled back to the 50 with some pocket pivots. PRA Health, Healthcare Services, uptrend, sideways to the 50. All I need is a kahuna, so I'm waiting for my signal. American Capital Agency, AGNC, pull back to the 50, couple of kahunas, it pays out 10% dividend. Starwood Wayward Points, sideways move, looks like it's breaking out here, had two pocket pivots and a kahuna, 2.5% dividend. Now, just in case, some protection for your portfolio. ERY, energy, bear. If energy goes down, this goes up. Nice uptrend off of 9. 3 kahunas in the last 6 days. That makes me pay attention. Lamb Weston Holdings, consumer staples. This would be a defensive play. Skip it. Treasury bonds. If this was a stock and it just broke above the 200, held support and broke out with kahuna and pocket pivot, I'd be very excited. I'm interested in the short-term bonds. This would be short the Qs. It's got to get above the 50, so I'm building a stable of these to watch. Short the 500, got to get above the 50, a stable of these to watch. Ultra Pro, short the Qs, again, got to get above the 50. But I've got a normal number of ETFs here that are to the downside on the major indexes that I'm going to be watching as potential ways to play a market to the downside. So keep in mind, if you think the market is going down, there are several things you could do. 1, get out, go to cash. Number 2, shift to defensive plays, big dividends, utilities, tobacco, beverages, things that typically weather downtrends better and pay a dividend. Number 3, buy contra ETFs, buy things that go up when the market goes down. Number 4, buy puts on things that you think are overpriced and capture some of the drop in the market. Number 5, short individual stocks. The easiest thing is to go to cash and to probably buy contra ETFs. But if you think the market's going down, there are a number of things that you can do to protect yourself. So Let me go back to the S&P 500 chart, make a last comment, and then say goodbye. I am not saying that I think this market is going down. I'm not saying I think this market is going up. I'm saying that we're sitting on the 50-day moving average. We've got a weekly red bongo and a kahuna to the downside. We've got a lot of pressure that says this market is going lower. We're also in August, September being the worst month historically for the market, and some of the big pullbacks have occurred, crashes in October. I think we're at high risk that this market is going to pull back here. Saying that, and let me clear this thing off, and let me get some more data on that. Despite the fact that I said that we're at high risk of this market pulling off, if I start to go a prolonged period of time, I do not see a very bearish picture here. We have seen, going back to 2011, multiple pullbacks. Starting in 2013, most of those pullbacks were within the 50. In the summer of 2015, going into January 2016, we had our biggest pullback in years. Since then, we've had shallow pullbacks. This was before the election, down to the 200. Now, this could just be more of these shallow pullbacks to the 50 and not indicative of anything more dangerous. However, I don't have a crystal ball and I can't say. So I look at this and I say, yes, it happened here, 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 and it's happening again. And each time the market rebounded. Only liars and liars can tell you that they know what it's going to happen tomorrow. All I know is that we're at a position here where there's risk. Based upon bucketology and my new high, new low index and my canaries and my Scotty index, my guess is that this is going to be like the others and we're going to move back up. That is my guess, my hypothesis. I am married to my wife. I am not married to my hypothesis. If this stock market breaks down and cannot get above that 50, if I look at the NASDAQ, if it breaks down and cannot get above that 50, then I'm going to unload a lot of my positions very quickly and take on more protection. I am not married to my idea. Yes, I'm going to go over what's been happening for a year. We pull back shallows and we bounce. But I do recognize if I go back in time, we get periods like this. We certainly expect periods of time when we're going to see more volatility and pullbacks all the way down to the 200 and potentially below. On that note, have a great week. Be careful. This is a market that's not without risk, but sometimes it climbs the wall of worry and goes higher. You'll have a great week, and thank you. And just to remind you, if you have interest in attending my meetings, they are going to fill up, and I promise